Hello and welcome to The Resilient Investor with me, David Stevenson. As in all the episodes of this podcast, we try and understand what's going on in the modern stock markets for a beginner investor or at least an early stage investor. And that could mean looking at everything from kind of broad themes such as how to invest in global equities or how do equities fit with bonds, all the way down to understanding more kind of focused strategies. And in this episode, we're going to talk a bit about a crucial sector, arguably one of the most important sectors in most modern economies, which is healthcare. Now, let's just start with some basics first. Most investors usually start with kind of broad buckets. They start with, I don't know, for typically, you might start with a 60-40 portfolio. You might start with 60% equities, 40% bonds, for instance. You could do all sorts of different permutations. And most investors stay invested at the kind of global level or stay invested at the national level. They might invest in US equities or UK equities. I suppose fewer investors look at sectors, but I actually think sectors are quite an interesting way of looking at investing because what they allow you to do is they allow you to pick out big trends and themes. Now you ask, why does that matter? The reason it matters is because national markets, the US equity market, the UK equity market, they are in reality a slightly haphazard collection of stocks that are just chosen to list on a particular exchange. Now, of course, by and large, US equities reflect what's going on in the US economy, but not exclusively so. So, for instance, the tech sector in America, something like more than 50% of all revenues come from outside America. So they are actually global businesses. And in the UK market, it's even more obvious. If you invest in something like the FTSE 100 and FTSE All Share, you're not really investing in the UK economy per se. You're actually investing in the collection, slightly haphazard collection of companies that have chosen to list in London. So national markets are useful, they're great, and of course they can do terrifically well, but they don't always capture bigger trends, whereas sector funds do tend to capture these big trends. And I suppose if I look at it, there's no bigger theme. Well, I suppose there's AI, but there's no bigger theme kicking around at the moment than healthcare, because we're all in an aging society, the developing world. We're all spending more money on healthcare. We're all looking at biotech and one of these amazing new drugs that are coming along that are going to cure obesity and anything else you can imagine. So healthcare is probably, along with AI, one of the most important global trends going on at the moment. It's one we talk about all the time. And I thought it's perfect to sit down and talk about this with Gareth Powell, who's head of global healthcare at Polar Capital and runs the Global Healthcare Trust. Gareth, welcome.
Hi, David.
Gareth, I sort of teed us up by looking at the fact that a sector fund can be a useful alternative for many investors because, as I said, many investors tend to think about things via geographies or big asset classes. And is it true that when you look at a sector, you're trying to capture a theme or trend that works across different markets? I mean, this is true for America, true for the UK, true for Europe, true for Japan. So should they form a core part of a portfolio, or can they? Or do you tend to find that investors tend to think about sectors generally as something they play around with more in their kind of satellite bit of their portfolio? How do you think it fits?
Yeah, it's a good question, and we see in terms of our funds how they're kind of used in different ways. I tend to think of them as offering sort of global growth type characteristics, so global growth products, and that can fit alongside core or, as you say, satellite. I think the great thing about healthcare as a sector and considering it's an investment fund is, how does it correlate with other funds? So
that means with that kind of relationship between two different kind of asset classes or funds.
Yeah. So, I mean, obviously, if you have a portfolio of investments, you don't want them all to go up together at the same time and all down together at the same time because you probably don't make that much headway.
Yeah.
So you want different things doing different times, and hopefully all together over time, you make a decent return. So, healthcare may act very differently to other sectors. And if you look within healthcare, 80% of the universe, as in companies, are product companies like a pharmaceutical company, a biotech, a medical device company, or a generics company. And what the great thing about healthcare is the sort of return that a stock generates is very much driven by the risks and potential rewards from that stock. It's not about the sector as a whole, how that moves, or whether markets go up and down. If you're a product company in healthcare, you do a good job, you develop a pipeline, you generate products, get them to market, then hopefully you generate a great return from that success. And it's really, a huge amount of that is driven by, those developments. So it's a very unique sector in that sense. And so the big challenge is picking the right stocks for a portfolio. But in terms of stock picking and active management and healthcare, they all fit really well together as long as you pick the right stocks.
Yeah, absolutely. So, okay, so we've got two things going there. So one is they provide genuine diversification, so that you're capturing different kind of things that move the market. And secondly, it's a quite good hunting ground for stock picking, for finding particular stocks that do particularly well. So, what is it? I mean, investors tend to look at these things and put them in buckets, don't they? Growth, defensive, these kind of things. Where does healthcare sit? Because I suppose you could argue that healthcare could sit, some of it's defensive, isn't it? Because people have to spend money on healthcare. The big healthcare companies in America are quite defensive, I imagine, but some of it's quite growth orientated. So biotech is probably the most obvious thing. Everybody thinks biotech, sexy, younger startup companies, that kind of stuff. So where do healthcare generally sit, or does it straddle both?
Yeah, I mean, people try and put these things in boxes, right?
Yeah,
As you sort of suggested up front. So I think, if I look at the really big successful stocks in healthcare, they're growth companies, right? So,
yeah,
the companies that give investors really great returns. It's the growth stories that are the most important. Value, if you just want to growth and value is much more difficult in healthcare. If you buy value stocks in healthcare, they need to be becoming a growth story again, if you get what I mean.
yeah,
So there's that kind of way of looking at it. I mean, if you look across economic sensitivity, again, you'd probably divide up the sector. So the most defensive areas, as you highlight, are pharmaceutical companies, biotech companies, particularly the big ones, and areas like healthcare IT. And
yeah,
then, if you look across the spectrum, in the middle, you may have things like medical devices, but that's hugely variable. You can have,
yeah,
devices where, they're not economically sensitive, or you can have devices that maybe are, and you can go right to the extreme with, cosmetic type,
yeah,
products, right? That's very sensitive. And then you have utilization. If private health insurance is a big driver of a particular area, that's going to have economic sensitivity as well. So you can have quite cyclical areas of healthcare and quite defensive areas of healthcare. And that can be really important in terms of how you shape a portfolio for different environments. And then you've got the different market cap spectrums as well. So, large mega cap stocks like pharma that are defensive, or, less volatile stocks, they're great for a defensive environment, as we've kind of discussed. But smaller mid cap stocks tend to be more volatile. And
yeah,
so they need an environment where financial conditions are really helpful.
yeah,
So if you look back over the last 3-4 years, we've had a tightening cycle, maybe 3 years, right? And we've come to the end of that. In that tightening cycle, financial conditions obviously become a bit trickier, and that, small and mid caps don't work very well. Whereas when conditions are better, those kind of stocks can give you great returns, including within healthcare. So, we've covered a lots of different boxes. I think it's about, the economic cycle, the growth opportunities, where stocks fit of certain categories, how they act in different environments. And that's, again, the benefit of, I think, a portfolio approach, because you can have different exposures in different environments.
I mentioned the defensive one, but one of the classic things that people like about defensive investing or more value investing is, I suppose, income, don't they? They like dividends. They like dividends being paid on a regular basis. Is there an income and dividend component to this story? Because I imagine some of the really big companies do pay a relatively well backed, quite generous dividend, do they?
Yeah, definitely. I'm pretty sure all the pharma companies pay a decent dividend. It's an important component of their total return. A lot of large mega cap healthcare pay decent dividends. And that, if you look during the pandemic, where a lot of companies struggled and pulled dividends,
Mm.
healthcare was one area where, that wasn't so much the case. I mean, obviously, the healthcare system are an important part of dealing with the pandemic. So still had operations, moving along, if you like. But in terms of the investment trust we run, it's not, income focused, but because it has a significant exposure to large mega cap healthcare, there's an income stream that comes through, and that's paid out to investors in dividends.
What yield is it running at the moment?
Um, Close to about 1%, I think, but I'm not sure of the exact number.
Yeah, it will
It
vary.
really, it really varies depending on what we've got in the portfolio at the time, right? Because if we take out a big divvy payer to something that's more growth and
Yeah, yeah,
very small divvies, but we essentially the message is, if there's income comes through, we pay that out to investors as
yeah.
dividends.
Now,
The prior life of the vehicle, because it was sort of on its second life, if you like, the prior life, it was much more focused on income. And that's because we started the trust when the sort of big divvy paying stocks in 2010 were extremely cheap and yields were very high. So it was like a growth and an income vehicle. And then in 2017, it became much more of a growth focused vehicle, but there is an income that's paid out to investors.
I've mentioned obviously one of the big drivers for the whole sector, which is an aging society. I mean, that's obvious. Are there any other drivers that are worth mentioning that sort of drive the sector forward? I'm guessing, looking at health budgets around the world, focusing on efficiency and lowering cost might be one of the drivers. There's this wonderful thing, was it called Baumol's? I can't remember, it was Baumol's theory, which is there's, some sectors are subject to constant cost inflation, particularly university degrees, but healthcare bills as well in America and in the UK is subject to constant inflation. So therefore, I'm guessing that any company that's quite clever about coming up with efficiency is going to do well. Are there any other big drivers that push through the whole sector that you'd identify?
Yeah, I mean, you hit the nail on the head in terms of developed market healthcare, right? Spend on health is very high. Health systems are hugely inefficient. The major issue is that they're centered on these massive hospitals, and the per day cost of big inpatient hospitals is incredibly high.
Yeah,
So what we think about in developed markets when we're investing in a company with a product or services, if someone unfortunately gets a condition, is there a treatment to keep them out of hospital?
yeah,
If they have to go into for a treatment, can that treatment be done, procedure, whatever, in a center that's not a big inpatient hospital, therefore much more cost efficient,
yeah,
like a smaller site where, and maybe a procedure like the idea of getting a new hip and knee,
yeah,
going in the morning, being out the same day.
yeah, 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 yeah,
Yeah. And then if a patient does have to go into a hospital for a procedure, are there products that can be used that are much less invasive?
yeah.
The recovery time is way, way quicker. And, are there maybe drugs that help patients get out of hospital quicker, their recovery? So there's those kind of things around that. The other sort of long-term major themes are obviously innovation. We
Yeah.
believe innovation can create,
I was going to ask you about AI in a minute,
yeah,
but
yeah, sure. But I mean, new kind of therapy options. We're seeing a huge expansion of different types of treatment options being
yeah,
investigated for disease. So that's really exciting. The other drivers in healthcare consolidation, it's the most fragmented industry out there. So that's a story. Emerging markets,
yeah,
healthcare, it's a
yeah,
very different story, right? It's like developed market healthcare was 40, 50 years ago. And then, the opportunity to invest directly there is a very powerful story.
Which, by the way, on that one, which country do you find the most interesting outside of the developed countries?
So India has
Yeah,
been standout for us over the last sort of 3, 4, 5 years. Just in terms of, there's been a bull market there. And that's driven really strong performance from companies like hospitals and pharmaceutical companies, manufacturing companies. And then outside of that, there's options in Korea, China, Indonesia, South Africa,
okay,
Brazil. But I mean, I I say India, it's been a great market, right? So over the last few years, you have to factor that in. But there's a really great story there as well in terms of the drivers. So that's been very powerful.
Trends we can't not mention when we talk about trends. Of course, all these was it GPTs,
GLP
GPLs,
ones, yeah.
GLP-1. Sorry, GPTs the other way around. We'll come to GPTs in a minute. The other acronym, GLPs, and all the anti-obesity drugs. Now that's actually is very much on what you're talking about, because of course those drugs are designed to keep people out of hospital. They're designed to keep them
Yeah,
in
yeah.
designed to keep them in the community and not have to keep clogging up hospitals. Is that a real game changer in your view? I mean, we've all heard the stories; they're all over the place,
Yeah,
and we know there's new waves coming through. It's
sure.
obviously a big revolution. Do you buy entirely into it?
So, having been investing in healthcare since, I started my investment job, if you like, in September '99, and from what I've seen in efforts to develop obesity drugs, the big sort of thing about these GLP-1s, I remember investing in a company that brought the first GLP-1 to market, and it was
Oh,
nothing about obesity; it was about diabetes
yeah.
and lowering blood glucose. But the product from Novo Nordisk, the product from Eli Lilly, what's I think sort of been the big development is you're getting greater than 10% weight loss. That was always the barrier,
Yeah,
because there's this thinking that if you can get 10% weight loss, that can provide positive outcomes. That was
yeah.
the general thinking, as far as I recall. And so, with the two products on the market, you've got substantially more than that. And what's been shown over the last few years is positive cardiovascular benefits, positive benefits on kidney health, positively impacting sleep apnea, and there's other works going on looking at things like
Well, they're looking at addiction, aren't they?
yeah, alcoholism, drug addiction, gambling, and such like. So the effects abroad, obviously, there's a huge unmet need here. Uh, you know, just on paper, theoretically a massive opportunity. So, these products are being rolled out. Demand has been very high, so the companies have found it a challenge reaching getting the right supply in the market. Then the longer term opportunities also are new mechanisms. So there's a mechanism that people are interested in called amylin, which may have a better tolerability profile. People are talking about, the current products on the market are once a week injections. Could we have once a month or
Yeah.
once every 3-month injections? Oral options. We should get some news on that with big trials reading out. So, things are moving along. There's a huge amount of research going on into the area. The best way to use these products, trying to improve tolerability with them. And so they've obviously got, a very large opportunity, the companies with the products.
And are you invested in them though? Is that a major part of your portfolio?
We have exposure to the with the investment trust to the obesity market, definitely through a few different stocks.
Yeah. I got my G's and P's and L's mixed up, and so there's also GPT as well. There's also the AI revolution that's happening now. A lot of people get very excited about AI and the healthcare market, and of course, there have been moves in that market. Microsoft bought Nuance, which is a big medical kind of software business, which I imagine is going to have a huge AI bit to what it's doing. Um, and I mean, obviously, people talk excitedly about AI revolutionizing, if nothing else, doctors' note keeping, from what I can work out.
Yeah,
That definitely seems like an area
absolutely.
ripe for it. Maybe we can understand what they write. But I mean, is AI overblown, or is it really a big game changer?
That's a really good question. I mean, I'm personally, if I think about broad application of AI, if you just think about your workload each day and what you could automate with AI, I think it's just profound the impact that it can have on everybody's life, if you like. In healthcare, I think I'm right in saying Nvidia sees healthcare ultimately being its biggest vertical.
Oh, really?
So they seem to know a bit about AI. And then if I think about what I'm seeing with AI, so there's been companies around, doing this for 10 years or so plus, where we're first seeing it is imaging. So, people's
Right.
scans
Yeah.
and using
Yeah. Yeah.
AI to, um, uh, you know, review images,
Yeah.
either with a human or without,
Yeah.
because there are capacity issues there in terms of having enough doctors to review effectively in
And I've heard
time.
that because they do that in radiology or whatever it is, don't they? When
Yeah,
they do the X-rays, and apparently it's quite effective, isn't it?
yeah. I mean, the clinical data suggests good as, if not better,
Yeah.
than humans. And then, ultimately you could see it becoming used as part of trying to make, product development process much better, like drug discovery, et cetera, et cetera. But, you're still going to need that early stage and sort of fundamental research in developing drugs, because when you see the big leaps forward in innovation and with new products, they all come from new targets. And you remember AI is sort of processing the vast amount of historical data we have, right? But it's not about a new target. So,
Yeah.
when GLP-1s were discovered, you know, there had to be basic research. I think the first one was found in the saliva of a lizard.
Yeah.
So we think it will be incredibly powerful. We think how we were talking about efficiencies earlier and such
Yeah.
like that could be fantastic. In you mentioned the consultant, and envisage him, the doctor, going around seeing patients, and if that all the notes are automated and all the stuff that follows on, like the prescription, the more tests, referrals, if that can all be automated out, it's just has a profound productivity impact. And I would say healthcare is one of the areas where we need the greatest productivity impact, if you like. And I'm a big believer in AI doing that ultimately.
Okay. One other trend I thought we'd also pick up on is a rather more mundane one, which is the US political scene. Um, and rather more predictable, this one, because we know who's coming in January. And we know who he's going to appoint as his new health secretary, a rather, how can we put it, controversial choice, I think is probably an understatement. Is Trump good or bad for the whole healthcare sector? You could argue good, because he's going to do away with a lot of the regulations. I mean, they're talking about really streamlining the regulatory environment. Could be bad. I mean, as RFK Jr. has got some quite radical ideas about things in the healthcare market. What's your take? I mean, we don't know at the moment. It's all crystal ball gazing, but you can spot from some of their announcements. I mean, has the stock market in terms of the healthcare sector taken it as a positive or a negative?
They've taken it very negatively, I would say. So normally the fear with the US election is that you have a very sort of, it's been described as in the past as a blue wave, and that makes investors very nervous because you have the Democrats in power. You have more government encroachment on kind of free markets, and people worry about that with healthcare investing. So obviously Trump won, Republicans did well, but what scared people more, I think, was the announcement that, as you say, Robert Kennedy Jr. or RFK Jr. Trump was nominating him to be head of healthcare. So some of the views from RFK Jr. are extremely controversial. And it's just the uncertainty that creates. In the meantime, you're in an environment where investors are excited about Donald Trump and the impacts, as you say, some of the policies and such for the broader economy. And so people are investing in areas, more cyclical areas and such, like not sort of healthcare focused. And then you have the uncertainty created by this nomination. We'll have to wait and see. Is RFK Jr. ultimately confirmed? I think there's a lot of uncertainty on that. If that is a scenario where he isn't, then I think that will make people more positive about the space and less nervous. If he is, people will, people were very nervous about, for example, investing in vaccines.
Yeah.
Which is
Wonder
obviously,
why.
but which is obviously not right. But people, in terms of, vaccines are the best products we've ever
Yeah.
invented in
Yeah,
healthcare.
absolutely. One of the most amazing innovations. Yeah.
preventative care is the best thing out there, for, in healthcare land. But anyway, so people will be nervous about vaccines and certain other areas. And so investors are going to have to tread carefully, right? Ultimately, you're in a position, healthcare suffered, being really impacted by this. Today, looking out, we've seen situations like this, many, many times over the last 35 years in terms of investing in healthcare when people are scared about the policy outlook, and each time it's been an opportunity to invest in the space. And as those uncertainties go away, and, you've got to remember that healthcare, obviously major issue, Congress is absolutely crucial for major policy change. And so you hope that, sensible things happen ultimately, and that, if the clouds clear, if you've invested in the space today with that transparency, the sector will move much higher. So that's kind of where my thinking is about the current environment. But yeah, it's been tough on the space. Sentiment's very low, but that's often a very good contraindicator as well.
I'll finish with one last thought, which is we've already sort of hinted at it. In fact, we've talked about it. One of the challenges facing is that you can absolutely see how we're endlessly going to spend endlessly more money on healthcare. I mean, it doesn't matter where you are, UK, US, but governments, they're under enormous financial strain, really. And obviously, there will be, as we've talked about, innovation. There will be a greater efficiency push through the system. AI will hopefully help. But isn't there this just a slight challenge, this constant headwind that the sector faces, which is it's going to have to be funded somehow. And it's either going to be bigger private medical insurance premiums if you're in America and in other countries as well, or it's going to be more government spending, and government's already under the cosh. The bond markets are watching quite closely now. Isn't that slightly always just a kind of a check on the whole sector, that the sector basically is fundamentally quite closely correlated to the ability of governments and for insurance premium payers to afford this stuff?
Yeah, I think it's, it's a major issue. It's something that's been, mentioned many times over the period I've been investing in healthcare. You can imagine post the financial crisis, there was extreme nervousness around this.
Yeah.
And we did see governments, say in Europe, lowering costs of medicines and stuff like that. But ultimately, you were able to invest in healthcare, invest in new products and services that offered value, and, make some really good returns. That's why our focus in developed markets is about productivity in healthcare, like using products and services that allow providing treatment in a really low cost way. And there are lots of opportunities to do that. There are lots of things that are expensive, unnecessary, and a waste of money. And you've got to believe over time the use of those kind of peter out. So that's how we really focus in developed markets. Now, emerging markets spend is way lower.
Yeah, but I said massive opportunity there.
Yeah. So our view is growth in developed market healthcare. The overall pie is not going to grow faster than GDP anymore. It's already slowing, right?
Yeah.
The opportunity is this is trillions of dollars in terms of size of market.
It's a huge sector. Yeah.
But what do think about what you invest in that and how that changes. That's what you've got to get right.
Yeah, absolutely. Okay, well, look, Gareth, thank you very much. And what I hope we've done is we've talked through one of them, probably, as said, with AI and the technology sector generally, one of the most important sectors in pretty much all our societies and all our lives at the moment. For there is one thing for certain, which is that whatever happened over the next 20 or 30 years, we will be spending more money on healthcare. Even if it might be a bit fiscally constrained or there'll be greater focus on efficiency, it's a simple function of aging societies, if nothing else, really. And so I suspect that if you're going to be looking at sectors, there's not many other sectors, I said, probably apart from tech and AI, than healthcare that you might focus on at them over the next 10 or 20 years as a sector to look at in the equity markets. And in the meantime, hope you found this episode of The Resilient Investor helpful. Join us next time. Thank you very much, and good luck investing.